Hello friends, greetings of the day. Welcome to the online session of Business and Commercial Knowledge. In this session, we are learning chapter number 4, that is Government Policies for Business Growth. Now, in this session, we will learn Foreign Direct Investment in India, that is FDI in India. What kind of activities in which FDI is allowed, what kind of businesses in which FDI is allowed, and in which businesses government has restricted or prohibited foreign direct investment. This is what we will learn in this particular chapter. Foreign direct investment may be described as flow of capital investment to an enterprise in a nation by another enterprise located in a different nation by capturing a majority stake in ownership in a company in the target country or by expanding operations of an existing business in that country. Now, simpler meaning of FDI is the investment from one company of one country to another company of another country. When a company from India makes investment in the company of America, that is considered as foreign direct investment for America because America has received inflow of capital from India. Same way, if any company from America makes investment in a company in India, this is considered as a foreign direct investment for India because India has received capital investment from abroad or from America. This is considered as foreign direct investment. That means investment from abroad. Now, this investment will be in the form of purchasing the shares. When an American company purchases the shares of Indian company, that is considered as foreign direct investment for India. Permission for foreign direct investment is not uniform for all the sectors. Government has given permission for 100% investment in certain sectors. It is 26% in some areas, 49% in some other areas, and 51% in some other areas. Now, in certain areas, FDI limit has been capped, like the insurance business. Government has put a ceiling on investment in insurance business where there is no approval through the automatic route. The company concerned has to seek permission from the Foreign Investment Promotion Board. Now, if automatic route is not allowed, we have already learned two types of routes. One is automatic route, another is government route. If automatic route of investment is not allowed, the investor needs to take a permission from the government, and the agency which is working on behalf of the government is known as Foreign Investment Promotion Board, that is FIPB, shortly known as. So investor needs to get permission from FIPB. If FIPB allows to invest, then and then the company or the investor will be able to invest in India. Now, FDI is prohibited in certain activities. Let us learn which activities are prohibited. First one is atomic energy. A foreign company cannot invest in atomic energy in India. Lottery business is also prohibited. A company which wishes to invest in lottery business in India, it will not be allowed. Gambling and betting, if someone wants to start gambling in India, or casino, which is popularly known as such kind of casinos and betting houses and gambling houses will not be allowed to be invested in. Then business of chit fund companies. These kind of companies are the companies which give guarantee for doubling your money within certain days. These are called chit fund companies or nidhi companies. So the investment in such chit fund or nidhi companies is prohibited. As I explained you, nidhi companies or chit fund companies are such kind of companies that give guarantee of doubling your money that you deposit in such company. They will give it double within certain days. So these companies are known as chit fund companies or nidhi companies. Investment in such kind of companies is also prohibited. Then agriculture sector, investment in agriculture sector is also prohibited, but there are certain exceptions. Exception is floriculture. Floriculture means farming of flowers. Horticulture is a farming of fruits. Development of seeds. Animal husbandry. Pisciculture is farming of fishes. Cultivation of vegetables, cultivation of mushrooms, etc. are permitted. Whole agriculture is prohibited, but these are permitted. If any foreign company wants to invest in the agriculture of flower, horticulture, that is farming of fruits, farming of vegetables, mushrooms, if foreign company wants to invest in these kind of activities, it will be allowed. Services related to agro and allied sectors will be allowed. Plantation is prohibited. Again, plantation, agriculture and plantation is prohibited. But under plantation, tea plantation is again allowed. Tea plantation, if foreign company wants to invest in the tea plantation, that is exempted, that is not prohibited, it is allowed. Then housing and real estate business is also prohibited, but there are also certain exemptions. The development of township, if foreign company wants to start an investment in the township, say for example you know Sahara township, see this kind of townships, construction of residential and commercial premises, construction of roads and bridges, in these kind of projects the foreign investment is allowed, but direct investment in the housing and real estate is prohibited. Then trading in transferable development rights, if the company wants to invest in the transfer of the properties, in that case it is prohibited. Manufacturing of cigars, cheroots, cigarillo, cigarettes, tobacco and tobacco substitutes. So any products related to tobacco is prohibited in India. A foreign company cannot make investment in manufacturing of cigarettes and tobacco products. Recently, there has been a tremendous increase in FDI in India. India generally received FDI from US, Britain, Singapore, Japan, and USA. These are the countries they make investment in India. Now, foreign institutional investors. Another concept that we need to understand is FII. Now, what do we mean by foreign institutional investors? FII are the large foreign groups with substantial investable funds. These are the banking companies, or they may be mutual fund companies, they may be insurance companies, and the available fund with them, they will invest in India. So they are considered as foreign institutional investors. FIIs are registered abroad with a view to investing in other nations, to invest in equity market, hedge funds, pension funds, and mutual funds. Say for example, a foreign bank wants to invest its large amount in India, that will be considered as foreign institutional investor for India. An insurance company which is working in America, but that insurance company wants to purchase the shares from Indian stock market, that company will be considered as foreign institutional investor in India. FIIs have strong research team which speculates to invest in a country with a possibility of a strong return in equity market. Now these institutional companies, these investors, they have a strong research team. This research team will keep a watch on the market, and whenever they feel that the share prices of certain companies are going to fall down or are going to increase in the near future, with which they can earn a huge amount of profit, they will make investment in such kind of shares. So on the basis of research they will make this investment. So thank you for now. This is the end of this chapter. Goodbye.